There. Okay, for a closer look now at Alibaba, we are going now to Santosh Rao. He's head of research at Manhattan Venture Partners, and he's standing by in New York. Santosh, you are the man behind some of these charts that we were just looking at. Let's begin at the margin side of things. Just put in perspective, that's the type of margins they're looking at. So much of it is from mobile. And again, 500 million people still are not even online. What is the potential for growth?
Hi, good morning. Thanks for having me. Well, Alibaba is ultimately a play on the whole rising Chinese market, the rising consumption, the fragmented retail market there. So overall, there's a good tailwind behind them. So I think there's a strong growth ahead of it. So the margins are pretty good. Mobile is still a small percentage of the overall e-commerce. It's, I think, about 37% of the total e-commerce revenues that they generate, but it's 87% of the overall Chinese mobile e-commerce market. So it's growing pretty fast. The overall EBITDA margins are in the 45% range. In fact, it was 59% in the last quarter, but overall, I would say on a run rate basis, on a standardized basis, I would say around close 50%. So margins are very strong, revenue growth is very strong, and there's a long runway ahead of it. So good story ahead.
Santosh, there are rumors, reports this morning that in fact there may be more stock issued. The price may in fact be higher when the IPO actually is launched. What sort of truth do you think there is behind this? It's obviously a very popular IPO for people who want to invest in this.
Yes, I mean, this is not entirely surprising. They'll either raise the price or raise the size of the offering, just looking at the demand for their stock. So it's totally not surprising. We price it at $66 a share, slightly above their range. So I won't be surprised if the rumor is right that they might price it close to $70 a share. So that's not surprising given the demand for the stock.
I'd like to go into some of the skepticism around it, skepticism from China as well, but particularly when you take a look at some of China's growth slowing. It depends on whether you believe that's true or not, but do you believe some of the reported values, sales brushing, they called it, sometimes something is settled online, the deal's been struck on Alibaba, but were there extra taxes that needed to go along with that? Or do you believe all of the numbers that have been presented?
Well, as with all Chinese companies, I would be very skeptical. I would read between the lines, like they say. So, but overall, I think the numbers are reasonable. I don't think they want to do anything that is really that'll raise a red flag with the SEC. And knowing what a high-profile name this is, so I think the numbers are. I would say they're pretty authentic and understandable given the demand for given just the Chinese growth market. So I think I can stand behind those numbers.
For investors in North America who take part in this IPO, whatever shares they get, it's really profit sharing, isn't it? They don't really have a say in where the company goes. Jack Ma and the management will continue to be in charge on that side of things. There was some question that they were able to just spin off Alipay, which is their payment side of things, without really even consulting the big investors, Yahoo, as well as SoftBank. Does that speak to any concerns down the line from management?
Yes, I think, and we highlight that in the report, there are some concerns, the VIE structure of this company, where you actually share in the economics of the entity, but you don't own the assets. So it's really, there are issues. Jack Ma, like you said, controls the whole company and his close associates. So I mean, it's not necessarily in the best interest of the shareholders. So I would say there are risks in that sense, the governance issues, which is pretty big. But that this is not entirely new. I mean, Tencent has a VIE structure, Baidu does. So all of them do. This is not new, but you should be always cautious that it is possible, not likely, but it is possible that there could be some shareholder unfriendly acts from the management.
Let's say that there are some more shares put onto the market and perhaps the price is a little higher if we get into the sort of $70 mark. Where do you think it might settle? Where do you think it might settle for retail investors to think, okay, we've seen the run up, now maybe we can enter? What kind of numbers on the share price are you looking at?
Sure. I mean, if history is any guide with all these IPOs, with this high-profile IPOs, there's always an initial pop of 15 to 20%. So it's totally not surprising to see about $80 to $85 when it opens. So I would say, you can expect that pop 15 to 20% initially. So that's high. And you should always remember at an IPO, there is the pricing of the IPO and then there's a valuation. So they're not really connected many times. So I won't be surprised if the price goes up to $80.
So Santosh, you're watching this closely. Do you get any sleep this week or not?
Well, we've been watching it for a while, so we're ready for this.
You got to sleep at some point. Thanks for joining us this morning.
Thank you.
That's Santosh Rao. He's head of research at Manhattan Venture Partners, and he joined us from New York.